Let me guess your story. You passed your founder challenge. You felt like you beat the system. You told yourself, now I'm funded, now everything will change. And then a few days later, that beautiful funded account is dead, violated, blown. If that happened to you, you are not alone. Most traders never keep their funded accounts for long. Industry estimates put pass rates for prop challenges below 10%, and a big portion of those who do get funded lose the account within the first few months. Tonight, I'm going to show you exactly why you can pass a challenge and still be completely unprepared for the funded account. 1. Passing the challenge does not equal being a pro. Most traders believe that passing a challenge is a certificate of skill. In reality, it often proves one thing. You can perform under a very specific set of conditions: time pressure, profit target, and someone else's rules. Prop challenges are designed to filter for discipline under constraints, not to guarantee long-term consistency. That's why pass rates are usually under 10%, and even many of those who pass later lose the account. The challenge is a sprint. The funded account is the marathon. You trained your body for a 100-meter dash, and then tried to run a 42-kilometer marathon with the same pace. Of course you collapsed. 2. The "I made it" illusion. When you see "passed" in your dashboard, your brain gives you a massive dopamine hit. You feel like you've crossed the finish line. The story in your head becomes, "I'm a funded trader now. I've arrived." But here's the brutal truth. The challenge was just the interview. The funded account is the actual job. And most people start that job already burned out from the interview process, emotionally tired from previous failures, and with zero plan for how to operate differently with real funding on the line. So you enter the funded account treating it like bonus money. If I blow this one, I'll just do another challenge. And that mindset right there is the beginning of the end. 3. Why this video matters. Most YouTube content talks about how to pass challenges, strategies, setups, secret tricks. Very few talk about why traders who pass repeatedly still keep blowing their funded accounts. But this is the real problem, because if you don't fix this part of the game, you will just become a customer, paying for challenges again and again, feeding the prop firms, never building an actual income stream. So in the next parts, I'm going to break down the actual psychology behind this pattern and how to rebuild your identity from challenge sprinter to funded capital protector. 1. Challenge brain versus funded brain. In the challenge, your brain is locked into a very specific game. You have a clear target, maybe 8 or 10%. You have a clear deadline, 30 or 60 days. You know the rules, and you are hyper-focused. This clarity creates aggression and urgency. You are willing to push, to trade more, to squeeze opportunities because you must hit that number before the deadline. But once you're funded, the entire environment flips. There is no fixed profit target anymore. There is no hard deadline to make 8%. The objective is completely different. Don't violate, stay alive, get consistent payouts. The problem? Your brain doesn't automatically update the software. It keeps running the challenge brain script in a funded brain world. 2. What changes when it's real firm money? Even though it's the firm's capital, your brain treats the funded account differently. Some traders become reckless. It's not my money, so I can push harder. That leads to oversized positions and fast drawdowns. Other traders become hyper-fearful. Suddenly, every loss feels like a crime. Every pullback feels like account death, so they cut winners too early or avoid good setups altogether. Both reactions come from the same root. Your nervous system is not used to managing this size of responsibility. You pass the test under simulation pressure, but you never trained your emotional system for the funded reality. 3. The anchor of the profit target disappears. In the challenge, the profit target is your anchor. It tells your brain what success looks like. The rules say, hit this percent, respect this drawdown within this time. You can build a clear plan around that. In the funded account, that anchor disappears. There's no hit 8% this month or fail. So what does your brain do?
It invents a new, usually toxic anchor. I need a huge first payout to prove it's real. I need to make back all the challenge fees from this account right now. I need to show social media a crazy payout. This invisible pressure pushes you into overtrading and oversizing even if you don't realize it. That's why so many funded accounts die within the first few weeks. 4. Identity conflict. In the challenge, your identity is, I am a fighter. I'm going to beat this game. In the funded account, your identity needs to become, I am a risk manager. I'm here to survive and collect paychecks. Most traders never make that identity shift. They stay in warrior mode. They keep swinging. They keep forcing trades, trying to dominate the account instead of serving it. That identity conflict is exactly what we'll attack in Part 3 when we expose the hidden killers that actually blow your funded accounts.
Now, let's talk about the real killers. Because you didn't blow your funded account due to one bad trade. You blew it because of a chain reaction in your psychology. 1. Revenge trading. Number 1 killer, revenge trading. You take a loss. Your emotional system gets activated. You feel attacked. Then you take another trade, not because it fits your plan, but because you want your money back. Analyses of prop challenge failures show that the majority of terminations come from a small cluster of high-emotion sessions, not from a slow, logical losing streak. It's that one day where you say, I'm not ending like this, and you break every rule you promised to follow. Revenge trading is not about the chart. It's about ego. You're not trying to win anymore. You're trying not to feel like a loser. And the funded account becomes the sacrifice. 2. Overtrading as a silent disease. The second killer is overtrading. Overtrading is like a disease that doesn't hurt at first. You feel productive. You feel engaged. You feel like you're doing something. But every extra low-quality trade is a small cut to your account and your mind. Instead of trading your A setups, you start taking B and C setups just in case. You jump from pair to pair, from session to session, chasing movement instead of waiting for structure. By the end of the day, you're mentally exhausted, your data is messy, and your funded account is 3, 4, 5% closer to violation. Overtrading is how funded accounts die quietly. 3. Oversizing and risk of ruin. Here's the math reality. When you double your risk per trade, you don't just double your chance to win big, you multiply your risk of blowing the account. A trader with a small edge who risks 2% per trade might have a relatively low risk of ruin, but the exact same trader risking 4% can face several times higher probability of hitting the max drawdown. And remember, on funded accounts, your max drawdown buffer is limited, sometimes just a few percent of the account size. So when you oversize in a funded account, you're not being bold, you're being mathematically suicidal. 4. Misunderstanding trailing drawdown and rules. Another hidden killer is not understanding the firm's exact rules, especially trailing drawdown. Many traders think they're safe because they calculate drawdown from yesterday's equity. But intraday trailing moves up when you hit new highs, and then one reversal hits the new floor and violates the account unexpectedly. Most terminations are not because your strategy is unprofitable. They're because you broke a rule, daily loss, max drawdown, consistency rule, driven by emotion and ignorance under pressure. In other words, it's not the market that killed your funded account. It's your behavior in response to the market. 5. Freeze and fear mode. Not every funded account dies from aggression. Some die from paralysis. Some traders get funded and suddenly become terrified to place trades. Every position feels huge. Every tick against them feels like disaster, so they close winners too early or skip valid setups entirely. They don't blow the account quickly, but they also don't grow it. They stagnate, get frustrated, then eventually overcorrect with one big emotional session, and the account dies anyway. Aggression kills you fast. Paralysis kills you slowly. Both come from the same place, untrained psychology for the funded environment.
Failure rates are not an accident. Let's be honest, if almost everyone is failing at something, it's probably not just an individual problem. Some sources estimate that pass rates for prop challenges are below 10%, and many funded accounts are lost within the first few months. These numbers are not an accident. Prop firms make a huge portion of their revenue from evaluation fees, not from long-term profit splits. Their business model is built around a constant flow of traders cycling through challenges, resets, retries, new accounts. So the entire structure, the time limit, the profit target, the drawdown rules, is optimized to expose your behavioral weaknesses. They don't need you to be stupid. They just need you to be slightly undisciplined under pressure. Time pressure as a psychological weapon. Time limits and high profit targets are psychological weapons. They trigger urgency, FOMO, fear of missing out, and the need to make it happen before the clock runs out. Even traders with decent strategies crack under this pressure and start forcing trades near the end of the period. And the crazy part? These same traders with the same system might perform just fine on a personal account without that artificial deadline. The evaluation is not just testing your edge, it's stress testing your emotional stability. The funded account as a filter. By the time you reach a funded account, you are not special to the firm. You are just another variable. They know from data that a large percentage of funded accounts will violate the rules within the first few payout cycles. The people who stay funded long-term are usually not the most aggressive, not the highest RR traders, not the flashiest. They are the most boring. Small, consistent risk, deep understanding of the rules, absolute respect for daily loss limits, zero ego about proving anything. The system is designed like a casino. It rewards occasional winners, but the house always wins from the churn. Your job is not to complain about the casino. Your job is to learn the rules so well that you stop playing like a gambler. Why blaming the firm keeps you stuck? It's very popular online to blame the firm. They hunted my stop. They rigged the spreads. They don't want traders to win. Some criticism is valid. Some firms do shady things. But if you only focus on blaming them, you never look at your own decisions and patterns that keep repeating regardless of which firm you're with. The question for a Sigma trader is not, is the game fair? The question is, can I master myself enough to beat the probabilities stacked against me? In Part 5, we're going to talk exactly about that. How to redesign your behavior so that passing the challenge is not the peak of your story, but just the beginning.
New objective, survival, not heroism. The first Sigma shift. Your goal is no longer hit 10% as fast as possible. Your new goal is survive 30, 60, 90 days without violating while slowly extracting money from the market. Think like a professional risk manager, not a challenge warrior. You are not paid for excitement. You are paid for survival. Hard rules for risk and behavior. Let me give you some practical rules you can literally write on your wall. Daily loss limit below the firm's limit. If the firm gives you 5% daily, your personal stop might be 2 or 3% maximum. Per trade risk small and consistent. Around 0.25 to 0.5% risk per trade on a big funded account is absolutely fine. Funded accounts reward consistency, not explosion. Session stop after consecutive losses. For example, stop trading after 2 or 3 losses in a row. No negotiation. That alone will save more accounts than any indicator. No strategy changes mid-session. You do not change timeframes, pairs, or setups because you're emotional. Backtest changes outside market hours only. These rules are not sexy, but they keep the account alive long enough for your edge to actually work. Pre-session script for your brain. Before you open the charts on a funded account, run a simple pre-session script. You can even say this out loud or write it. My job today is to execute my plan, not to force profits. I will stop once I hit my personal loss limit, even if I feel like continuing. I am managing someone else's money. My reputation is more important than this single day. This sounds simple, but repeated daily, it starts to rewire your identity from "I'm trying to hit a target" to "I'm here to protect capital and extract controlled profit." Journal the emotional patterns, not just the trades. Most traders only journal entries, exits, and screenshots. Sigma traders journal their emotions too. After each funded session, ask yourself, when did I feel the urge to force a trade? When did I feel fear and exit too early? Which thought came right before I broke a rule or increased risk? Analyses of funded account failures show that patterns like revenge trading, fear of loss, and overconfidence are the real killers, not the strategy itself. If you don't track these emotions, you will repeat them forever. Build a multi-month plan, not a one-payout fantasy. Stop thinking in terms of, "I want one big payout." Start thinking in terms of, "I want 6 to 12 consistent payout cycles." If your first payout is small, 2 or 3%, that's fine. The real flex is not a single screenshot. The real flex is being able to say, "I've been funded for 6 months. I haven't violated. I've withdrawn multiple times." Closing monologue. Listen, you passed your founder challenge because you learned how to sprint under pressure. You blew your funded account because nobody taught you how to walk slowly with a heavy bag of money on your back. You are not broken, you are just incomplete. The challenge phase trained one part of you, the fighter. Now you must build the other part, the risk manager, the capital protector, the patient professional. If you make that shift, passing challenges will stop being the highlight of your story. Keeping and growing funded accounts will become your new normal. That's the Sigma path. If you're ready for more deep psychology about trading, discipline, and identity, subscribe, drop a comment with how many funded accounts you've blown, and we'll turn your pain into a system.